Yo, it's Hublo back with another video. So today, as promised, we're going to be doing the Forex 101. For all the beginners out there, anybody who wants to get into trading, this is the video you want to see. This is definitely one of the videos I wish I was able to see when I first started. So let's get right into it. Kind of the content that you would want to expect in this video. We're going to go through the introduction. We're going to learn what is Forex trading, how the Forex market works, the terminology, basic strategies, and getting started. And then we're going to wrap everything up. So the first thing we're going to get into here, I'm just thrilled that you're about to take this journey. It's a roller coaster. It's something that a lot of people can't handle. And you're going to learn a lot about yourself during this journey. I'm Hugh Blow. I've been trading for about 6 to 7 years now, since 2019. I found profitability really early in my career. What happened in between there and then, I have a video on that, and I cover a little bit of that, but I'll cover more of that, soon in another video. But it's definitely been a long journey, trading profitabilities, ups and downs, creating ways to be more profitable. The market is steadily changing, with everything going on. So you always have to adapt and learn new ways to stay profitable. So Forex trading, discovering the exciting realm of currency trading. And that's what I'm here to do. I'm here to educate, and I want people to be able to enjoy this journey. A lot of this journey is sometimes for a lot of people is stressful because you don't have the proper mentor or the proper knowledge or the proper people that's teaching you the right things the first time. The thing about that is when you're coming into the information that certain people give out and it's not the right information, you're not getting that initial right information, then you're unlearning to relearn, which kind of starts your process all over again. And when you're learning something like this, it can definitely hurt your process if you're not learning the right things the first time. So I'm going to, share a little bit of insight that I've gained, strategies and stuff like that. Connect and learn and foster a supportive peer learning group. So you have to join a community. It doesn't have to be my community, which the link is going to be down below in this description, but you can join another person's community. Maybe you have been in somebody's community, and you could join plenty of communities. In the beginning, I think I had like at least 3 communities I was a part of, and just learning from either them or people that was just in the chat, like texting and asking questions. I think like that's the best way to kind of like learn as much as you can learn, especially if you're serious about this commitment and this journey. And thanks for joining on this video, on this call. That means you're taking that first step to being the person that you want to be in this space. And I appreciate you being here and tapping into this video. Make sure you like and subscribe and put the notification bell so you don't miss any more videos like this. So what we're going to be getting into next is what is Forex trading. So, Forex trading market, Forex trading is a global platform for currency exchange. So, just like if you were to go to the mall, go somewhere and buy something at the mall, you always pass by the currency exchange. You probably never used it, probably never really paid too much attention to it, but it's the same thing. If you wanted to exchange your money there, you would exchange it at the rate that it currently is going for. And that's technically what we're doing when we're trading, just digitally. Now. It's digital. Now that trading is digital, we're doing it digitally. So, currency trading. So, traders profit from the currency fluctuations via transactions. So, these these transactions that we're doing, whether it be at your local kiosk at your mall or the transaction when we click buy or sell on our phone, this is a transaction, and our brokers and our history is going to paint a picture of those transactions that are happening within your trading account. Even when you deposit money in or withdraw money out, you see those bulletins, you see that transaction. So it's just like, anything you would see on your bank account when you swipe your card. So open 24/7. So the Forex market is not necessarily open 24/7. Technically, the market is always moving, but you have cryptos, you have futures, you have, assets and things that do move 24/7. So technically, the stock market in itself does move 24/7. You could trade on the weekend if you wanted to, whether that be crypto or anything like that. So there's a wide variety of opportunities for you to make it in this space, because it runs almost practically all day. So decentralizing market space. So Forex operates globally, enhancing access without a central exchange. So I definitely want you to kind of do your homework a little bit on that. I won't dive too deep into that because that could turn a lot of corners. I definitely want you to do your research. If you're serious about your journey, notate that down and definitely do your research on that just to get a little bit more of an expansion. Like I said, part two is going to have a little bit more expansion depth into that. So definitely tap into that when I release that video out. Market size and importance. So the thing about Forex trading, it's the largest financial market in the world. And what's so big about that is there's $6 trillion that moves in the market entirely every day. So there's not only a lot of money to be made, but you have to watch your account because there's a lot of money to be lost as well. So always, protect yourself, always use stop losses, things of that nature. Economy stability. So Forex trading significantly impacts global economic stability and growth. And that's one of the things that affect Forex because it has a lot to do with the state of the economy certain times. But most of the times you can kind of navigate that with high impact news, medium impact news. You kind of could go on, these different sites and figure out exactly what's going to be happening. But there's also things that just kind of sporadically happen, kind of, like what we've been dealing with as traders, and the traders that have been trading in the space know exactly what I'm talking about. Everybody would know what I'm talking about because you probably heard of it. But just with even Trump and the tariffs, that has been affecting trading a lot. I've seen literally like 100 pip move and like 1,000 pip move recently. I'm sorry, in like 2 days because he said something about the tariffs that affected a pair, and literally it just shot all the way up. So it affects different things in different ways, and you have to be mindful that you're not always going to be in control when it comes to this space, and that's why you have to control the things you can control by using a stop loss, by going break even if you're not ready to take profits. Like things like that. Those are help habits that you're going to eventually build up to. And people like myself are going to help you with that learning curve so that you get there sooner. So, participants in the market. So, we have the central banks and the government that participate in the market, and they also regulate and ensure currency stability. So that's their job in the market, and they kind of what people would call manipulate it, but they have to stabilize it when they need to. And those are just things that they do. Again, do a little bit of deep diving in your due diligence on that, and figure out how the central banks and governments have their hand into the markets. I'll give you that, as some small little homework. But banks and finance, so banks and facilities, uh, global currency transactions. So within those transactions that are happening, banks and people of that deal with finance are involved. So banks also have, trading rooms and things like that as well. Just a quick story. When I first started trading, and I started going to the bank a lot. I was like withdrawing like $500 almost every 2 days or so, and I was trading futures at the time. And this banker that it was at PNC, he ended up coming to me, and he was just like, "Hey man, I always see you, like coming here, like withdrawing. You don't really like, come in and, really need us. You kind of just use the NTM and dip. Like, what do you do?" And I was just like, "Well, I recently started trading." He was like, "Man, like I used to do Litecoin." And to be honest, between me and you, trader to trader, we actually trade upstairs. Like we have 6 traders that are trading right now. And I was like, wow, like the fact that, he was cool with, of course, telling me that, but they have traders on site at the banks that are currently trading the bank's money and money that you put in the bank as well. Like when you put in money in your savings account or stuff like that, they use a portion of that money to either lend out and loan to other individuals for loans, car loans, house loans, and things of that nature. And if you ever were to need that, that's when it's all numbers. When you put your money in there, now digital. So they just move money and do whatever they want with it. When you look at your account and you look at the standings, it's just you're just looking at numbers on your phone. So I'll allow you to, do your due diligence and research on that as well. Biz and corporations. So businesses and corporations use Forex to manage currency risk as well. They are also, hedge funds, things of that nature. They hedge the market, and they're also currency managing risk as well, within the markets. And then, there's us, retail traders, people like me and yourself that are not connected in any of these entities or any of these ways, but want to capitalize on what the Forex market has to offer and what we can do when it comes to making money in the markets. So retail traders seek profit in the Forex markets. So we seek profit in the Forex market. That's our goal, initially getting into this thing, of course. So section two, how Forex market works. So we're going to talk about how the market works and everything that kind of like goes into play when it comes to the market. So currency pairs, which is really important when you're trading, you definitely want to learn exactly which currency pairs are the ones that are going to be, useful for you to trade. And you're going to do that by like trial and error. Trial and error is really important when it comes to just this space and just kind of testing what works for you, because everybody's different. And like I said, you're going to learn a lot about yourself during this journey. So major, minor, exotic pairs explained. So we're going to explain a little bit about how those pairs work and the categories there. And so major pairs are highly traded. So those are pairs that are highly traded. For some examples, Euro USD, things of that nature, are minor pairs, and major pairs are less, and major minor pairs are less common to be traded. You know, so just those minor pairs that people rarely even trade. But and then you have the exotic pairs, which these are usually pairs that people first hear about when they come into the trading space. Nas, you have US 30, you have things like that. So you have different pairs that are moving at a lot more faster pace, and those are exotic pairs. And then you have the minor pairs that are commonly less traded, and then you have the major pairs that are traded more frequently. So definitely do your research on which pairs fall into those categories, but I'm pretty sure as a trader, especially trading in the Forex space, you're going to probably trade different things because everybody tests just different pairs out just to kind of see if that pair relates to their strategy and what strategy they're using at the time. So bid and ask dynamics. So the bid and ask prices reflects the buyer's max willingness to buy. So the ask price is the seller's minimum acceptance to sell, and the spread indicates the liquidity. So we're going to dive a little bit deeper into what that means, but when you buy and sell currency, you have to make sure you're paying attention to the spread because the spread indicates where you actually get in. So you can see the market fluctuating at a certain point in the market, and literally spread could be up here, and you can think you're entering here because you didn't pay attention to the spread, and now you're getting into the trade about in the positive, and it could go in reverse as well. You can also think you're entering a trade here, and the spread could be below, and spread could it moves, so it could be a high spread. If you're dealing with a very high spread, then you could literally get into that trade in the negative, and that could be really bad. And it's very unlikely for you to really get into a trade with even a fair amount of spread and just instantly like be in profit, be in the blues. It's kind of like almost it just you just really have a raw spread account, or something of that nature that warrants you to have like instant executions and stuff like that. So but you'll learn more about that as we go in. Understanding exchange rates. So currency value factors. Currency value is shaped by rates, inflation, and stability. So those are the three components that factor into the markets and the value factors of each currency. So exchange rates systems, fixed, floating, and pegged. So definitely do your research on exactly what fixed, floating, and peg, because like I said, trading is like an onion. There's a lot of layers to it, and some of this stuff you have to do your own research on, because at the end of the day, you want to get a certain level of comprehension so you know what you're doing when you're trading and you're confident in what you're doing when you're trading. Market sessions. So this is really important because this is going to let you know what sessions are going to be the sessions for you. So in trading, not only are you going to have to take the time to learn what currencies work for you, you have to also take the time to learn what sessions work for you. And that's going to be a whole nother part of your journey that you're going to have to, dip your feet into. So the benefits of overlapping hours. So increased liquidity, volatility, enhanced trading opportunities is that those overlapping times in the market in which, a session goes from session to session. So you have New York session, you have London session, you have Asian session. Um, in those sessions, during those overlap periods, you could have, high liquidity and volatility in the market. Asian, European, American sessions, each session influenced the market trends and currency movements significantly and differently. So you have to make sure you pay attention and learn, more about that. We got section 4 terminology. So a pip. Pip in Forex, pips are the smallest change in currency exchange rates. So a pip is every time the market moves a point, just one pip, two pips. Like every time that the market moves, it's a pip, whether it goes down or whether it goes up. And a lot of, people who deal with stocks and whatnot, they say tick. So you may be familiar with that. So currency pair volatility. So pips help traders evaluate currency pair value changes. So it also helps you see by the pippage what values are being changed as far as the volatility in the market and what the market is doing and how and what can you capitalize off the market based off what you're seeing. A profit calculation is key. Traders use pips to determine the gains and losses in each trade. So, trade strategy factors, understanding the pip shapes for effective trading, because it's so important for you to understand exactly how much you're risking, how much you're winning. And we're going to talk about that a little bit further. But actually, I have a video on that risk management that is the video right before this one. So if you check out that risk management video, I dive deep into that. I do have a part 2 of that that's going to be coming out for the exclusive members of my chat. So definitely tap in when that comes out. Leverage and margin. So leverage more. So leverage allows traders to control bigger investments. If you guys tap into my Discord, I recently was speaking to my community about leverage because I was doing the 100K challenge for them, and the account that I currently have with the prop firm that I'm using, it's a 1 to 30 leverage. A lot of brokers, when you're using your live money, most brokers have now gone to the model of 1 to 100, which you have a little bit limited risk, but 1 to 500 is a really good, risk to, work with. And that's pretty much the standard when it comes to risk when you're dealing with trading maybe your own funds or the type of broker that you end up choosing. But you have to decide that for yourself when that time comes. But I have been doing this challenge for my chat, and I'm gonna, donate, proceeds to a good cause, and also, do cash giveaways and things of that nature. So if you guys want to participate in that, definitely tap in to the Discord. And once we, get the payout from the chat, we're gonna definitely, make sure everybody, just has fun and, just welcoming everybody to the community. So when it comes to leverage, 1 to 30 is probably one of the lowest leverages that I've seen. It's really hard to maximize your profits in an account like that because you have so little money power to really work with. So you have to be careful on how you throw your lot sizes and what lot sizes you use because um, you have to understand that your leverage is way lower than it usually would you would really be used to at a 1 to 500. And like I said, do your research a little bit on that. on how that works. So profit and loss, higher leverage boosts gains and risk in trading, and risk management, leverage use needs careful risk management assessment strategies. So the thing about risk management is that you have the profit and loss factor and risk management tying together so well, because you have to be able to use your risk to ratio appropriately to make sure that you're getting the proper risk to ratios every time you're trading, and that's what keeps your trading consistent and proficient, because you want to be a profitable trader. So you want to make sure your risk to ratio is at least a 1 to 2, 1 to 3, or 1 to 5, or 1 to 7, because at the end of the day, it doesn't matter how much times you really lose, your risk to ratio would always be in your best favor, because you're always going to use your risk to ratio to enter and exit your trades. And that's what's so important, making sure that you use it proficiently. Of course, if you need to cut certain, trades and things like that, you definitely want to, do that. But make sure you try to your best to stick to your risk to ratio, because it's going to save you in the long run. So broker limits. So faces unique leverage limits due to regulation. So brokers set these limitations on us because of the regulations that we have either in the US, or the regulations that the governments are setting for brokers to have us use. So you got to be very aware of that, and just do research when you're looking for a broker, or either using a prop firm to trade an account, to make sure you have the right leverage that is beneficial to the way that you might, be interacting with the market. Bid and ask price. So the bid is the price, is the highest price sellers will accept. So that's the bid part of what we were talking about a little bit earlier. So the ask is the price, is the lowest price that buyers will pay. So in between that, you have spread. So market liquidity difference. So bid ask spread indicates market activity levels. So you have to make sure when you're getting into the trade, you understand that there's spread involved and you're paying attention to the spread. And if you don't know the spread, or your brokers not showing you the spread before you're executing your trades, and like you can see it in live time, make sure you just research it, so you can be ahead of the game and not enter in a trade, possibly in a deep negative, because you weren't just paying attention to that one thing. And that just comes with trial and error though. Trade execution key. So bid and ask prices are key for successful trading. Can't stress that enough. You got to make sure you pay attention to the spread every time you place a position. So this section is specifically on spread, currency pair trading costs. So the cost indicates spread, commissions, and fees incurred. So it's not free to trade. Obviously you have to put your money into an account, but every time you place a trade, whether it be a broker, whether it be a prop firm, you can see the transaction in which they charged you a commission and fees for every trade you took. Whether that be, a prop firm and or, a live account. Sorry. Excuse me, guys. A lot of talking. But the impacts of trading profits. So wider spreads can significantly reduce potential trading profits. And that's kind of what I was explaining earlier, with it doesn't matter where it is in the market. If you think you're getting into a certain position and the spread is fat, um, it's not going to be a good look for you. I've entered trades where the spread was like 250 and I didn't realize it until I into that position. I'm like, why am I already negative $200? What is going on? And that's just me not paying attention and just going through those growing pains as like, a learning trader, and trying to figure out the game, and learning in this process. So bid versus ask, price gap. So the bid price is what buyers pay. Ask is sellers. So the buyers is the bid price and the ask is the seller's price. So make sure that you definitely do your research on that, so you can get a little bit more clarification if the slides haven't, verified that for you enough, or gave you enough clarification. Like I said, there's going to be a part two to this video. Varies with market conditions. So spread may widen during volatility and low liquidity periods. So the market has times where it's really volatile when just pushes up or pushes down really quickly. And if you try to get into those moves, sometimes the spread might be so thick that you may not be in good shape. It doesn't matter if the market is going that direction or not, or the market will have to forcefully go into whatever direction you decided to go in further enough to take you out of what the spread put you through, and being in the beginning of that position. And then low liquidity periods where the market has really no value. The market's kind of consolidating and you kind of like, click the button and get in. That could be a time where spread is really high. So you just got to pay attention. Types of spread. So there's fixed spread. Fixed spread remains consistent regardless of the market fluctuations. So usually a lot of brokers sometimes have accounts where you can choose where you have a fixed spread where spread doesn't really affect you too much when it comes to the market's volatility and low volatility in the market. So variable spreads. So variable spreads change based on market conditions and liquidity. So making sure that that is one of the things that is very important when you're researching a broker, that you understand which line the broker is on when it comes to this, because this is really important when it comes to trading and preserving your capital, the money that you work so hard for to put into this account or buy this account. So factors affecting spread. So market trends, market conditions affect spread variations and trading costs. So it could affect your commissions. It could affect, your swap fees and things like that. Holding trades during, a longer period of time or through sessions they charge you for that. So there's a cost associated to participate in this sport. Currency pairs. So currency pairs have unique spreads based on volatility. And that's definitely something I'll have you also research a bit as well, that there's a big, uh, big deep dive when it comes to, that trading volume. So that's what a little bit we were talking about earlier. Higher trading volume tightens spread and improves pricing. So when there's higher trading volume, there's a lot of people in the market, there's momentum in the market, the spread lessens because there's, not a lot of room for that to be in the market with, more money and more, institutions pushing, the market, at a steady pace. uh, Broker policies. So broker policies impact spread via commissions and fees. So these are prices that brokers have to charge in order to not only, make money because they make money off every trade you take, but also it is also part of regulation that they take commissions and fees as well. So you have to make sure that, you understand that there's going to be costs associated with the initial cost that you intend to put up to start this journey. Impact on trading. So key terminology shapes traders' choice and strategies effectively. So you have to make sure that you understand the terminology and you're trading a strategy that is a strategy that you have studied over time, back tested, demo traded, things of that nature to make sure that it works effectively. Risk management using terms helps in assessing and mitigating risk. So making sure you know the terms and what is happening in the market is very key when it comes to risk management. Profit margin terminology clarifies profit calculations and investment expectations. So profit margin is just another terminology that you would use. It's kind of like P&L, kind of like that. And, you would see that on your broker when you check your history and things like that when you open and close trades. Market insight, familiarity with terms enhances enhances comprehension of market movements. So that's a real big one. Market insight, familiarizing yourself with like news, high impact news, what is low impact news, things of that nature, and understanding the market's movements. I do have a market structure video that is really great. It really teaches you the beginning steps of higher lows, higher highs, how the market moves, things like that. There is going to be a part two to that video as well, but volume one is out now. So definitely look at the past videos, and I have that video up, market structure. So, basic strategies that you would want to use when it comes to Forex trading. So, technical analysis. So, price moves, chart patterns show price trends. So, the price action that you see on a chart when you look at it, when you look at a Forex pair, when you look at a crypto chart or a stock chart or any chart that you look to get into, you're going to see a trend in the market. There's going to be a higher time frame trend, and that's where the direction that market is going over a duration of time. So trade smartly. So past performance predict trends. So make sure you're looking left to get right. And that's one thing that definitely helped me when it came to my trading journey. I had a lot of great one great mentor, but I had a lot of great individuals that I met over time. Really helped me with my developmental growth, and they showed me and taught me the right things the first time. So I was really able to get success really early in this. So trend indicators. So market trends shown by indicators. So there's certain indicators that let you know what to do, when to buy, things like that. But certain indicators are sometimes pretty late. So you kind of want to make sure that you pay attention. And indicators that I'm talking about, like MACD, RSI, MAs, and stuff like that. And I actually have my own indicator that I actually coded myself, and that just helps me a bit with my edge. When it comes to market, you always want to have an edge. Um, and it just helps me out a lot. I actually, just worked on it. Took me about a year to do. For about 6 months of that, I had to like stop trading, actually, because at the end of the day, I knew that I can do it, and it just took time. So you have to make sure that when you're stepping into this journey, just understand that it may come with other things. It could just boils down to if you're willing to do it or not. And this journey has taught me a lot, and it's grown me so much. So let's hop into fundamental analysis. So fundamental analysis is economic indicators impact on currency. So just like what I've been talking about throughout the whole video, news, looking at what news is affecting a certain pair that you're trading and things of that nature, and making sure that you're paying attention to low, high impact news. So economic indicators show the country's economic health. News affects market mood. News swiftly alters traders' perspectives and market trends. So make sure you're always paying attention to the news. Rates affects exchanges. Interest rates affects capital flows and currency stability. So that's definitely one thing that you definitely want to look at and pay attention to, is the difference in between technical and fundamental analysis. So risk management. So stop loss set. We were talking about this in the beginning of the video. Implementing stop loss orders helps protect investments with significant downturns. So the market could do anything at any moment, so you always want to protect your capital by using a stop loss. Diversity. Spreading investments across various assets minimizes potential financial losses. And making sure that um, when you're actually in the space for long enough, you can trade multiple pairs. You can like look at this pair and also look at that pair and understand exactly what might be going on, and you can trade both at one time. And sometimes, to be honest, throughout the week, I trade like about 5 pairs, not all at once, but I look at all of them, and that's what the diversification that this is talking about, spreading your investments across various pairs, so you have more of a possibility of interacting with the market in a great way where you can capitalize. So size for safety. So proper position sizing ensures that no single trade jeopardizes your overall capital. So that's really big, in making sure that you're appropriately using a lot size. In my chat, in the profitability section, I do have a chart that you can use, that goes from 0.01, which is the lowest lot that you can use, all the way up to 100 lots, which you can use possibly more lots with that depending on your broker, but that's the biggest lot you're going to probably, use like as a trader. Possibly, you could use more, but That just really depends on your broker, depends on if you're trading under certain restrictions and things like that, and your leverage. So that all ties in as well. So getting started. So choosing a broker, broker regulations and licensing, verification, verifying brokers regulation by trusted authority. So making sure that you're researching that if this broker is regulated, unregulated, you can trade with both unregulated or regulated, but you have to understand what that comes with when you're going unregulated route. Your money could disappear one morning and you couldn't basically do anything about it because there's not a lot of laws that protects us as traders when it comes to us dealing with unregulated brokers. Access is service quality. So test the broker support team response time. So when you're first checking out a broker, they have a little chat box. Test it out. See how quickly it takes for them to respond to you. Do they have a bot that kind of gives you the runaround? Do they send you um, a notification that they'll email you about the certain thing that you're inquiring about? So just test it out and see. Spreads versus compensation. So analyze the broker's fees carefully and costs vary. So make sure you're understanding what the commissions and the spread looks like when it comes to the pair. You may be able to look at the spreads more often when it comes to certain brokers. You may not always know what the commission is because that kind of like fluctuates based off your lot size and what is going on in the market at the time. So brokers kind of like have fluctuation in those ways, but there's certain brokers that give you an opportunity to have a fixed spread and a fixed commission, or no commission. So definitely check that out. So check trading platform features. So check if the broker has an app, or what apps are the broker is associated with, and does that app work with the user friendliness that you're trying to work with when it comes to getting into the market and participating in this sport. So evaluate trading platform tools and features. So a lot of trading platforms, they have like a lot of tools, features, education, things of that nature, that could help you, in your journey. Opening a demo account. So opening a demo account is very important because you only a paper trade first. You want to get that feeling of what it's like to execute trades, the emotional side of it. The real emotional side of it go won't you won't feel as much until you're trading your own money, but demo trading gives you at least that perspective of what it's like to execute trades, what lot sizes you should be using, the spread, everything at that time, because you're going to be able to see the history. So, choose a broker with demo accounts is a recommendation that I would say. Not all brokers do, but try to choose one that does, so you can try to test the waters and see, possibly what that broker could be working with when it comes to spread and accountability and transparency. So, demo trading is definitely important. So trading with virtual funds to build confidence. So that's exactly what you're doing when you're trading a demo account. You're just trying to build that grit, build that confidence that it takes to not only just participate in this space, but the longevity in this space. Trade test. So experiment with strategies to discover success. So you have to try, different strategies. I wouldn't say change your strategy so often, but make sure that, you're doing what's right for you. And sometimes you can see something that somebody else is doing and kind of like add it to your repertoire. There's like things that like I've seen like other traders do that I didn't have in my bag, but I ended up, being able to study, what they did and things like that, or like catch it in one video. And now I can implement it into what I'm doing. And it makes my trading so much better because I'm implementing and adding it to my arsenal. So trade now, boost your trading skills with our tools. So I have tools in my Discord for how to start trading, fast start section, things of that nature. If you want to upgrade your subscription, it's gonna open you up to more sections of the chat that just gives you more and more knowledge and valuable gems every week. So we have education and resources. So use online courses, use webinars. I go live, about 2 or 3 times throughout the week. So definitely, tap into my lives or my YouTube videos. Have a lot of good content that I have out. So definitely tap into it. Um, read trading books and articles. So reading books and articles enhances your knowledge and understanding of trading strategy. So a couple of books that I would recommend definitely is Trading in the Zone, The Disciplined Trader. There's a couple other ones that I have in my chat. Mastering Your Emotions, things of that nature, is books that I'll consistently, read. Um, and those are ones that you definitely want to tap into because those are the ones that's going to help you develop the mentality that you need to be in front of the markets and have that mental toughness when it comes to this because this game is 80 to 90% mental. It's you against you at the end of the day. So, engaging in forums that foster connections, shared insight among traders. So, you want to get into a trading group, a community, people that are also doing the same thing that you're trying to do or doing in order to be successful at this. Because sometimes you just, need to hear from like how other people are doing. Like you're gonna hear, different things, different stories. Like I said in the beginning of my trading journey, I was in different chats and different, telegrams and things like that, and just, soaking up different, knowledge when I could, just of like how the market was moving, how people were participating with the market, what did they do, what strategy they were using, things of that nature. I wouldn't try out everything that I saw or heard, but there's some things that, if I felt like it had merit, I would look into it. But market news and analysis updates. So staying updated with market news aids in making informed trading decisions. So every week in my chat, I drop the news for the week for the pairs that I'm going to be trading in the chat. So that's something that I do for you guys, and it is in the free section of the chat because I want to make sure that people have the knowledge to know how news can affect your trading, and it can affect it very harshly if you're not, careful. I actually put the high impact news on my chart. So when I'm actually looking at the chart, I'm actively trading. I transfer the information of the high impact news or the news that I want to, that's going to be possibly on a pair that I'm trading, and I have it on my chart written down so that I know exactly when it's going to happen. And I decide, depending on how market is either moving before, if I'm going to either hold that trade or even participate in it at all. So it definitely gives you a little bit of clarity. So conclusion. So the conclusion and recap to this video, I just want to encourage you guys. So, key concepts learned. So, reflect on essential ideas that have shaped your understanding in this video. So, make sure, you probably replay this video, take notes, things of that nature. It's going to really help you a lot just re-watching this video. Practice makes perfect. Regular practice strengthens knowledge and improves skills. So make sure that you're continuously improving your skills, watching videos like this. It doesn't have to always be my videos. There's other traders out there that have awesome, content, and but you have to just be careful what you watch because not everything is for you. And like I said in the beginning of this video, if you learn the wrong things, you're gonna have to unlearn to relearn. So profit potential. So identify financial gains opportunities through informed choices. And that's all trading is. A lot of people would call it gambling. A lot of people would call it a lot of different things, but all it is an informed decision. How informed are you about the decision that you're going to be making? And that's what's going to determine your profitability and your consistency. Embrace lifelong learning. So stay curious and seek knowledge to adapt and grow. You want to continue to stay knowledgeable, coachable, and always seek knowledge and adapt to the growth that you're going to continue to see in yourself and your trading when it comes to this space. Risk management tips. Always assess risks and protect investments to ensure stability. I can't stress that enough. I talk about this in my chat all the time. I have keys to be profitable. I talk about risk management in the subscription part of my chat. And I give you guys these gems every single week because it's so important. And I've seen traders where they've made like $5,000 in a day and literally like lose not only with their profits, but lose everything in their account in like one trade. And it's like risk management is key. You have to understand your risk, define your risk, and understand what are you willing to risk on this trade? How much am I willing to risk today? What am I okay with stomaching when it comes to this trade? And it does the risk to ratio make sense to me? So making sure that you're staying in line with those steps and you'll not only get to this process and have even possibly a shorter learning curve, you know, than people like myself or people that's been trading, for a lot longer that haven't saw profitability if you're coming into the right information the first time. So in conclusion, thank you for watching this video. Again, my name is Hugo, back with another video. Again, if you guys like this video, leave a comment, like it below, and it's going to be more content like this. I can't wait to do part 2 for you guys. Stay tuned for part 2. If you guys like this video or want to see more content like this, definitely like, subscribe on this video. Join our Discord, man. Join the Discord for the gems and the knowledge and the free trades that I post every week. I've been doing the 100K challenge. So there's a lot more free trades that's been posted, but regularly I'll post at least one free trade for you guys in there a week for people who don't have the subscription in my trading community. So it's totally fine. I don't always uh push people to join, my specific community. Like I said, you could join multiple communities, but um you have to find a place where you can learn while you earn, and that's like one of the key things of the takeaway, that really changed my aspect, because not only was I learning good knowledge, I was earning as well. So it boosts my belief level, of this thing could really work for me if I take the cautious steps to make sure that I'm, doing the necessary things and the daily disciplines every day to make sure that I'm profitable and consistent. So thank you for watching this video. Make sure you hit the notification bell, and Hugo, I'm out.